Hello, everyone, and welcome back to Your Finance TV. Here to discuss the week ahead, we have Brendan McCarty from Column E Management. How are you, Brendan?
I'm great. Welcome back. Great to be here. Can't seem to speak this morning.
It's okay. It was a beautiful weekend, so I can understand that you're out there celebrating the beautiful weather. All right, before we kick off, don't forget to click on that like and subscribe button below. We're nearing 4,000 subscribers, so thank you very much for your support. Continue to watch this great content we're producing. All right, the upcoming week will bring significant economic releases. On Tuesday, we'll receive updates on the labour market, July jobs number, and June housing numbers. Wednesday, we'll bring the ADP number, and on Friday, we'll get the non-farm payrolls. However, the most important data point of the week might be the PCE number, which is projected to show a 0.2% rise in prices from last month and 3.2% increase year over year. Core prices, which exclude food and energy costs, were also expected to rise 0.2% from June and 4% from a year ago. And we all know that the Fed is aiming for a 2% core inflation rate, faces pressure to increase that goal to 3%. Brandon, can the Fed achieve this 2% goal, or is it unrealistic?
I think it's unrealistic based on their current path, so to speak. Like what got me about Powell the other day was I got the feeling I was looking at Robert Rubin from the 90s. And I was still in college, but late coming out of college. But I remember reading about Robert Rubin and how he'd basically say, yeah, dollar's strong. And he would do it exactly as they tried to short the dollar. So he'd run over the shorts over and over and over again. Well, I get the feeling that Powell is trying to do the same with the inflation story, saying, oh, we're going to remain tight, and vigilant, blah, blah, blah. Every time the dollar, like an asset market pops. So ever since he spoke in July, ever since they raised rates in July, the markets have been lower. Interestingly enough, ever since he spoke on Friday, the markets have been higher. I don't know what's coincidence or not, but I think his goal is to continue to push against continue to raise rates or continue to get tight. But they're pushing on the wrong side of the string by raising rates. Liquidity dropped a little bit this past week. It's to the bottom of the range of the past, so 6 months. But they're not doing enough. So if they want to get to 2%, they have to start really getting tough on assets and liquidity. So that's where the gains are coming from. That's where the wealth is coming from. This Fed has all been about trying to fight inflation, and they've gotten inflation lower just because the rate of change has slowed. But I mean, we're all still looking at 30% higher prices than we started the pandemic with. So if you look at that part, they're going to be known as the Fed who created a ton of inflation. So their goal is to fight back against that and push and push and push. But if they don't suck the liquidity out of the system, it won't really matter. Right now they're tight on rates and they're damaging the banks. There's no doubt about that. The banks look like crap lately. Interesting enough, one we talk about later doesn't. I don't understand why, but whatever. But I'll just say this: the BKX looks terrible. It's moving lower. It's moving back towards the March lows, and the Fed doesn't realize that they're tightening rates and they're screwing the banks, and when they should be tightening liquidity to get down to 2%. And I don't think they have the guts to do it because what it's going to cause is a lot of selling. So far, commodities fell down since the Fed hike. Well, last week they sort of started to wake up a little bit, so we'll see where that goes. But long story short, I don't think they have the guts to get to 2% the way it should be done. We could continue to raise rates and damage the banks till infinity, I guess, or until another bank goes down. But the banks are not performing well into a very difficult year for markets, typically when this happens. So I don't know if they have the guts to do it, but they need to cut liquidity to make prices go lower, and they're not really doing that. So we'll see where that goes.
Yeah, because if they do end up at 3% annualized, we're going to be working into our 90s. So
yeah.
It doesn't make life easy for people. All right, let's move on to some companies that are reporting this week. And on Tuesday, pre-market, Best Buy will report their earnings. This report will be interesting considering the recent performance of consumer companies. Best Buy's share price has declined by nearly 8% this year, and analysts have been lowering their estimates for these earnings. Best Buy is often seen as a challenging stock to trade, and it may need to deliver something exceptional to halt the decline in its share price this month alone. What surprises could Best Buy bring to the market, Brendan?
So the markets are not particularly happy about misses in this. I mean, we remember Dick's Sporting Goods got absolutely destroyed 2 weeks ago, and there's several other names that haven't, like Kohl's, I think went down pretty hard last week. We started one of the things I started doing with I got into the AI craze, if you will. One of the things I always wanted to do is compare earnings reports for the last two for every company and then tie it to the chart. So I started doing that with the AI, which does it so much bigger. And it's what's interesting about Best Buy is the market gets the hint that things aren't going well, and that's what the earnings calls basically said. They were cautious, and they got a little bit more cautious with the last call. The chart coming into this is not great. It's getting really hit the past week. I assume that has to do largely with what's going on in the consumer sector, not Best Buy alone. But the analyst community at 3 buys, 7 holds, and 2 sells. 2 sells. I wonder who those brave guys are. Brave souls are. Though it's a pretty much neutral view. They haven't missed a report since May of 2022. So these numbers may be coming down, but they haven't missed. Hedge funds have been adding big time to this name. I think it was Bridgewater was a big adder. I'm not sure though. I don't know if they're adding long or short. I know that shorts were big in the financials, and I think the shorts moved over to the consumer sector, but I'm unsure about that. If you compare the calls, the last 2 calls, they laid out risks that they were seeing in the previous one, but then they weren't sharing risks in this call. So they got like less detailed. I wonder if they had better visibility with the last report, and they didn't 2 reports ago, and didn't have that much visibility with the current one. Interesting enough, they're shifting their views on stores. Like digital has been a big deal for them, like everybody. We're all getting lazy and don't want to go to the store. So they're turning some of their store, they're taking retail space they're taking a sales space off the ground and creating bigger warehouses in the back. So they're shifting from less sales to more storage, just like everybody. I think there's certain outlook from last quarter may come. I think they were more certain. Let's put it this way. They gave more risks 2 earnings calls ago, didn't give that many risks this past quarter, and seemed to be more optimistic. So if they come in and miss it all, they kind of set the market up for saying, all right, things are going better. We're certain we're going to get to this point B from point A. If they miss that, it could really hurt the stock. And I think that's why the sellers are out there, because they don't believe Best Buy is going to report such a certain outlook as they did the last report. So I think there's a risk to a miss here, even though they really haven't missed in almost 2 years. So, and I know the numbers have come down, but I think they were almost. I think there's a lot of visibility that disappeared for a lot of corporate America over the last 3 months. I don't think anybody expected this turn. Dick's was one. I had a list of them. I don't have them in front of me, but I could count several companies that just completely missed this quarter, missed this drop in the consumer, missed the turn in the economy. Like industrial metals have turned lower. That indicates global growth is going sideways. So I think a lot of people missed this, and I think Best Buy may have been a little bit too optimistic last time around, and that's why the market's selling off, preparing for a miss or a downgrade in expectations. May not be a miss, but the forward guidance may drop.
Yeah, the 2 brokers out there with the sell recommendations, I see R5 Capital, or I don't know who they are, but Citigroup is the other one, which I was surprised a big bank would have a sell recommendation. But also their price target is $70, and considering that the stock closed at 72.67, it's not really a huge sell recommendation with that price target.
Yeah, I mean, they're up this week. I guess they can bang the drum and say, hey, we were right this week.
Okay, on Wednesday after the close, Salesforce will be reporting its earnings. Despite being a strong performing stock over the years, Salesforce has experienced 6 consecutive quarters slowing revenue growth. The forecast suggests this trend may continue for the 7th quarter. However, it is possible that Salesforce will emphasize the AI capabilities in the report, either to divert attention from the revenue slowdown or to capitalize on the AI trend. Salesforce is currently targeting around 10% annual sales growth and a 42% increase in full-year adjusted EPS. Brennan, can they meet these expectations?
So this is a great looking chart. I mean, a great looking company earnings chart. Nice trend higher. They're having a lot of success in the Einstein AI. So revolutionizes your sales channel and your CRM if you use the AI. it's funny. You see that as a just side note. You go like the AI's pump these little comments like when you type an email, the AI suggests something, or when you do a search, the AI Bing chat suggests something. Einstein suggests stuff to get you through the CRM, but I wonder how effective it really is. It's something that curious. I don't know. It's kind of this section, this attack, this use of AI that a lot of companies are using and saying it's helping their systems. I don't know how really effective it is. But anyway, as a side note, anyway, their push is this Einstein AI. They interestingly own 90% of the Fortune 500 companies. So I didn't realize that. So their biggest focus is small and mid cap. And small and mid cap is actually slowing down according to their order book. So when we did our little comparison between reports, and the CEO was so gung ho. My God, Benioff, guy is just going crazy, excited. Oh, the company's great. I mean, the stock price going up, so super excited. But then you go to the COO, and my God, it's like night and day. This guy is sandbagging things. Things aren't that best. And then Megan something or other jumps in the middle, and she says all these great things about what they're doing operating wise, earnings wise. So I think what's interesting is we have two different views coming out of their executive suite, where the CEO is cheerleading the stock and the COOs maybe trying to pump it back. I can't tell. Hedge funds have been getting out of this name after the peaking ahead of out of this name. The peak positions were in May, and that's when they started falling. I think it was when the stock started actually falling. Analysts are still on the bullish side, 22 buys, 10 holds, 1 sell. Again, I don't know who that brave person is, but good for them. Him or her. I just think that the market is, again, this is another situation where the CEO is cheerleading the stock. The market's starting to think, I don't know why they're cheerleading the stock anymore, and there's another side to this story coming. That's my guess. They're using AI to speed up their business, obviously, with the Einstein. It will make more. What I think it might ultimately do is make the client more sticky, in that you won't be able to lose clients as easily because you have this extra added benefit. If you have basically when you own 90% of the Fortune 500 market, the only what you have to do is add services to your existing platform. This is one of those existing services. Will it add a lot of platforms? I don't know. The biggest thing I found from the two reports though was the small business market is showing longer deal cycles, meaning it's taking a lot longer to close business on the small business side. If that is the case, and that's where the future growth in margins is, there could be a threat to margins going forward, because if they're only the Fortune 500 companies will grind your fees down. Every one of them will, because they're big. They have a lot of revenue. They can demand lower fees. Small businesses can't because they're not as big and they don't have as many clients. So if the deal cycle is slowing on the small business side, small and medium business, that could affect margins. So I think there's a threat against margins going into this call, with the threat of the slower cycle. I don't know how much of the small business is affecting it compared to the large one, and it'll be material enough. But I think they'll mention it, because I don't think small business is doing that well right now based on the environment. I mean, it's just the stock itself hasn't been the best, so it's something we'll have to watch. But I think there's a threat to a downgrade in the small business side. They'll probably beat earnings. I mean, the earnings chart looks great, but it's the outlook. It's always the outlook. And I think, I mean, even did Microsoft? I don't know if Microsoft missed. Who missed? I can't remember now. But it was Apple. Apple had downgrade earnings. So, and Apple's a one-trick pony these days, essentially, with the iPhone. I know they have other services, but the iPhone drives everything. Well, the CRM drives everything for CRM, Salesforce. So I think there's a possible threat that the small business could drag a little bit.
Yeah, well, don't forget with Apple, it's AirPods as well. The one sell recommendations out there from Bernstein, and obviously they've got a very good track record out there on the research side. So interesting to note them as the only sell recommendation.
Good for them.
Okay, let's go back to consumer, because on Thursday after the close, Lululemon reported earnings. Despite a challenging consumer environment, Lululemon has maintained strong performance, with customers remaining loyal to their brand. However, higher raw material costs may be impacting their profit margins. Although analysts have increased their price targets for Lululemon, the increases have been relatively small. Can Lulu sustain its strong performance this year, Brendan?
Lulu's an interesting company. I think we've talked about them so many times. I think I'm getting very into Lulu, even though I've never been into a Lulu. They always seem to pivot when the trends are coming, right? So they did failed Mirror. They haven't done well in Mirror. That was a pandemic play. I think they actually bought it before the pandemic, so they were hoping it would be a pandemic play, but it really never benefited. Then they moved right into men's gear, or ramped it during the pandemic because every man went out of suits and into casual wear in front of these Zoom calls. Then they developed a shoe line, which we all heard about last year. I think it's done very well because it's somewhat affordable. And they're actually fashionable. It's interesting how I think they look like Hokas in some case. Now they're shifting into golf and tennis, and they're probably already there, but they're making a special mention of it. So they seem to constantly shift. In tennis and golf, I don't know, it's more of neutral sports for men and women. So they're trying to maintain this neutral view. But if you look at the chart, it literally has been range bound since the election 3 years ago. It's been stuck. It made one burst higher, failed, came lower, and it's been in a range forever. Earnings look fantastic, though. They continue to rise year after year, and the stock just can't seem to get out of the way. It's like the market's waiting for a miss before they want to get excited to take it higher. One of the things that got me about the NVIDIA call last week, in looking back at NVIDIA's, I did a review of NVIDIA within our 3Ls weekly update, and I went back to NVIDIA's earnings all the way back to 21. And every time the AI said they were overwhelmingly positive and optimistic, the stock literally peaked, or within 1 quarter, because it's funny. I don't know. I haven't run this across many companies, but anytime the ChatGPT tells me that some company's overwhelmingly positive and optimistic, the stock seems to peak. Lulu is on its last call was overwhelmingly positive and optimistic. I don't know what to make of that yet, because I still don't really have the full gauge of this new process we're sort of using. But I'll just say the stock can't get away from 381 and selling off from it again. The market is selling consumer stocks lately, so that could be the reason. I think for Lulu to get higher beyond 381, they don't only have to beat, but they have to announce new products just to blast through that number. I don't think the market wants to go through there, and I think that the market is pricing in a peak in the stock right now, even though it's in a range for 3.5 years, essentially, or 3 years. I think if they come out with a better outlook, better product, more products that drive the wheel, drive the gains, I think that will help the stock get away from this 381 range. It's hit that number 7 times and can't break through. I used to have a rule that the third time, I used to have a rule when I was trading more often that you knock on the door twice, the third time you knock the door down to get through it. Well, they've knocked on the door 7 times and can't seem to get through the steel door, apparently. So long story short, I think they really have to beat by a strong amount, and they have to come up with something that moves the needle. Maybe it's in tennis and golf. Maybe they shared that a little bit in the last call to, tell us that. I don't know. But the market just won't take the stock higher. The stock's getting cheaper with every earnings report, but I don't know where it sits from a PE standpoint. So it could be expensive already anyway. So that I think they need a significant beat to break through 381. They've been beating every time. They just need to accompany it with something that sustains the stock for a longer period of time and gives it a better upward trajectory. I mean, NVIDIA only went higher. So it was the fall of 22, I think, where they started using overwhelmingly positive. That's where it came out of their sentiment. And the stock climbed for a couple of quarters after that because they had the new products really streaming, the data centers and all that sort of stuff. Then they peaked in the January and fell from there. So Lulu needs to come out with their own data center category that really blows off earnings going forward. I don't know what it is because I really don't shop there, but I'll just say that I think that's what the catalyst would be to get it past 381.
Okay, well, let's move on to the 3Ls. Brendan's quick picks for the week, all earnings related again this week. Are you ready to jump into it, Brendan?
Let's go.
Okay, let's start with PDD Holdings. They bought Tuesday pre-market.
Nice. I like it. Nice bounce off the 65 week. It looks like it wants to climb to the top of the range, which is somewhere in the low 90s.
Okay. Five Below, the symbol's FIVE, and they report Wednesday after the close.
So this is another consumer name that's selling off before they even report. It's getting hit, but it broke through two supports, so I'd leave it. Broke through both the 65-week and a support at 180.
Okay, Broadcom and their symbol's AVGO. They report Thursday after the close.
So I like it. Chart looks like Nvidia, so it has a high consolidation of sorts. But the buyer stepped in around 800 a few weeks ago before this last week's ugly candle. But I think I like it.
Okay, MongoDB, MDB is a symbol there. They report Thursday after the close.
I would leave it. Failed on 420 in July and has not reclaimed it.
Okay, good one to look at for Thursday as well. Pre-market is UBS.
So this is the bank. This is the only bank that I know of that's moving higher. I haven't looked at Morgan Stanley and Goldman, but the BKX is sinking and UBS is going higher. I don't know. Usually when there's times of distress, UBS actually goes down first before anybody does, them and Deutsche. So I don't know what the heck's going on here, but I actually like this stock against this BKX downturn. So that's your risk you're playing with, I guess. But I like it. Amazing since the banks are performing so poorly. But UBS is moving higher.
We'll be on the back of the Credit Suisse deal. Last
Probably
one,
is.
Yeah, last one to look at is Dell and their Thursday after the close.
I'd like it. Tough one, but the price climbed above the range. A good report should get the motor running on it higher.
Well, Brendan, thank you so much for your insights for this week. You have a great week of trading.
Hey, thanks. You too.
And for everyone else out there, good luck investing.